A very good morning, guys. The 100th episode exam had a trick question in it. We mapped a box 24,500 to 24,600, and the market tore the floor of it in the first 30 minutes. The plan stopped out, and I'll grade that straight because what survived Tuesday was not the view, it was a process, a defined risk structure that capped the damage at 34 points, a stop loss that fired exactly where it was supposed to, and one conditional oil that called a break before it happened. Also, quietly, the smartest desk on the street just completed a 3 day volatility masterclass. That is today's episode. This is Tanmay H. You are listening to episode 101. I am Tanmay Gutagoti. Let's go. So, let me set the scene, guys. So Tuesday's expiry day, Nifty closed at 24,471, down 112 points, about half a percent. And here is the shape that matters. The open at 24,575 was the high of the day. It broke 24,500 inside the first half an hour, hit an air pocket, and fell to 24,429 by late morning. The ground sideways between 24,430 to 24,480 for the rest of the session. 24,600, the Monday's magnet, was never tested. The Sensex lost 388 points and closed at 78,154, and the weekly expiry settled at 24,471, 128 points below the max pain of 24,600. Sit with that number for a second because this is your first lesson today. Max Pin said 24,600. The settlement printed 24,471. That is the second time in three expiries the pin theory has failed. Max Pin is a tendency, not a fixed level where the expiry should happen compulsorily. It tells you whether the magnet is and not whether the magnet wins. The moment price broke the floor of the box with force, the magnet stopped mattering, and the crowd's short puts, 5.5 lakh of them, became the fuel we warned about. The low 24,429 landed exactly in that air to 24,400 zone, episode 100 mapped. Now the grade, and I'll not dress it, but we'll look at it later. So now the part I find the most important, guys, and the volatility cycle complete in three sessions. So Friday, the front week traded under 10% volatility while the crowd sold puts, and the podcast said do not sell the volatility. Monday front IV exploded 22% to 12.2. The curve inverted. We said the smart money was long on both sides. Tuesday's expiry day implied crushed back to 9.95. The VIX fell almost 4% to 11.8, and the curve normalized. And look at what the proprietary desk did with it. From the official participant file, they were long 2.14 lakh calls and 0.72 lakh puts on Monday night. By Tuesday's close, 2,000 calls minus 13,000 puts. They dumped the entire long wall book into the expiry, selling the exact spike they bought cheap 3 days earlier. Buy volatility when it is boring, sell it when it is terrifying. That is the whole trade, and they executed it across three sessions in plain sight of anyone reading the data. And who bought what and what they sold actually? The crowd. On the breakdown day, retail bought 2.09 lakh calls, taking them net long 1.89 lakh calls, while sitting short 5.2 lakh puts. Read that again. After a 112-point fall, the crowd is now positioned maximum bullish in both directions. Long calls, short puts. Meanwhile, the FI has added again. Put book at 4.85 lakh contracts, a fresh high. Short 1.98 lakh calls, short 1.56 lakh index futures against 6.17 lakh stock futures, still roughly 4 to 1 hedged long. Cash flows were the token. FIS plus 259 crore, DI plus 25 crores. The armies have simply moved down one floor and reloaded. Which brings us to the new option book, and for the week we will discuss. For the 18th August week, max pain now sits at 24,500 550 level. The old magnet at 24,600 is history. The new one is one floor down, and both sides piled on it in a single day. 40 lakh fresh calls and 24 lakh fresh puts at 24,500, taking it to 51 lakh calls against 43 lakh puts. The deep puts the deep put base sits at 24,000 with 58 lakh. Above it, about the magnet of 24,500 sits the resistance at 24,600 and 24,700, 45 lakhs and 48 lakhs respectively. The weekly straddle currently costs around 281 rupees for 7 days at a 10% implied, that is back to cheap. Sounds familiar? It should. It is the Friday setup all over again, 100 points lower. And sectors told you where the fear went. On a red day, India's internet rose 1.9%, pharma 1%, IT 0.6%, cement fell 1.6%, FMCG 1.2%, metal was down 1%. That is defensive rotation. The third different leadership in 3 sessions. Nobody is committing. And a quick word on what is happening globally. The US closed soft, Nasdaq down 0.6%, S&P down a third, but Asia woke up strong. Korea is up a massive 3.7% this morning, Taiwan up half a percent, Nikkei green at fresh highs, only Hong Kong is red, down over a percent. Gold has climbed back to 4402 dollars per ounce, and the one that matters the most, Brent is at 89.38 as I record, 60 cents from that 90 trigger mark we set on record 2 days back. The rupee closed at 95.44, its weakest, that is the oil tax showing. And the gift nifty is at 24,556, about 85 points above our close, which means the market wants to open above 24,500. So the reclaim test I am about to describe, it is coming in the opening bell itself. And our own book on a minus 0.46% nifty day, the all cap book gave back just 0.08%. Since the rebalance, the benchmark is down 1.22%, the strategy is down 0.21%, adding an alpha of more than a percent, and it has widened every single day this week, 0.592 to 0.85 to 1.01% alpha. Falling tape rising alpha, that the system doing its job. You can check out the portfolio on rupeecase.com. So here is the map for today, guys. And after a stop loss day, the honest bias is patience. The whole day is one number, 24,500. We closed 28 points below the new max pin, reclaiming 24,500 on a closing basis, and the pin engine restarts. 24,600 is the first fight, and fresh 51 lakh call is present over there. Failing at 24,500 and rallies are for selling. So that should be done. So buy on dips and sell on rise. That is what we are playing for a mean reversion towards that 24,500 550 zone. So 24,400 first, and below 24,400 the crowds 5.2 lakh short put starts burning again with air towards 24,200. So below 24,500, keep a watch on the downside, guys. The acceleration can be very fast, but yes, the turnaround around should happen, and 24,500 is the base mark. Brent takes out 90, downside scenario gets the benefit of the doubt. Do not fight the tape that day. Two, tomorrow is Sensex weekly expiry, the third run of the new closing auction. So keep auction rules loaded, and whatever you do this week, keep the risk defined, guys. Do not play naked. Tuesdays just showed you why the traders who survived the trick were the ones who paid 34 rupees to ask it. And one more thing, guys, today is the no trading day we are planning to have. So if you can control yourself, request everyone to do not trade on today and keep 1 day of no trading ban active. This is in contention with all the regulatory charges that have been applied, the STT increase, as well as the closing auction session that has been brought in, which has created more manipulation than anything else. So if you want to support the cause, keep a no trading day uh, today, guys, and follow the rule. Have a great Wednesday, by the way. And one broken box, one completed volatility cycle, one crowd leaning bullish at the lows, one new magnet at 24,500. Watch 24,500 for on a closing basis. Watch oil at 90. This was the Tanmay. If you found value in this, guys, share it with one trader friend who needs it right now. Subscribe on Apple Podcast, Spotify, and Amazon Music, and listen it live on rupeegate.com where it streams first. And give it a rating, guys, and a review if you want something to add to this podcast. See you all tomorrow morning on episode 102.